This is for a special edition of Frontier Opening Bell with me, Boason Omofaye. And of course, I'm being joined by Dr. Hendrik Snyman, who is the Chief Investment Officer at Gaia Fund Managers based in Cape Town, South Africa. Good to see you, Dr. Hendrik.
Good day, Boason. Thank you very much for giving me the opportunity to speak to you today.
Great. And quite a congratulations by your new fibre optic real investment fund. Quite a very interesting fund and very unique. What's the key objective of this particular fund that you've floated?
The key objective of the fund is to give collective investment scheme and professional investors a means to access infrastructure and specifically fibre as an investment asset class, and to allow them to do so in a tax-efficient manner, which is allowed via real estate investment trust framework.
So tell me about the structure of the fund, for example, when you talk about the targeted investors, what's the expected return on their investment?
So the targeted investors we are targeting with the fund is primarily collective investment schemes, pension funds, high net worth individuals, and family offices. It's not directed towards the retail market. The objective of the fund is to achieve a return of CPI plus 10% over the holding period, as it were. And the investment return will be received via primarily distributions, cash flows from the underlying assets. And the fund will specifically buy into operating networks. That is to say that we will only invest in networks that have achieved at least a minimum uptake of, say, 20%. So we won't be investing in networks that have just been built, but rather networks that have been operating for some time and as an uptake to produce cash flows. Within 6 months, the first dividend will flow from the underlying asset.
What's the tenor of this fund, for instance? Tell me.
It's an evergreen fund, so the intent is for the fund to continue, not to end. So, but the investors can actually sell out of the fund at any point in time to other interested parties. The industry, the fibre industry in South Africa is still very, very new, and actually with anything new, the returns are still extremely attractive. But as the industry matures and the uptake increases, we should see some yield compression, which would allow, if an investor was to sell out, to take profit in addition to the cash flows that they would have received up to that date.
Well, Dr. Hendrik, if I might, how does this fund compare to similar competing products within the South African market, and what risks are we looking at in terms of whether it's exchange risk or inflation within your yield environment?
So specifically within the fibre market, there isn't a means for collective investment schemes and pension funds to readily access fibre as an investment asset class unless they go the unlisted fund route and invest in unlisted instruments, which naturally has its own issues with regards to transparency and a lack of regulations and control between the fund manager and the owner of the collective investment scheme, as it were. With the broader property REIT space, it would compete. It's just another asset class. Rather than earning rental on a property, you are now earning a revenue effectively also from renting fibre capacity, as it were. The industry is still very much, as I say, it's early days, so there is risk involved with that, and the risk being that our assumptions may differ from expectations. But you would receive a much higher yield than you would in the compared to the rest of the property REITs in terms of cash flow, to reward you for taking that risk, as it were. And critically, what this listed instrument does that other listed funds do not do, given the fact that there isn't a retail component to it, it would mean that the tradability between various investors, the process of price discovery would be much more rational, open, and transparent. So one wouldn't see volatility with regards to the share price. Naturally, that you won't have. It's a double-edged sword. The price can't run away with itself with people thinking, this is going to be the next thing in sliced bread, and it's going to have 3 or 4 or 5 multiples of growth. You wouldn't have that, but naturally on the flip side, you won't ever or shouldn't actually trade to a significant discount to the establishable net asset values via discounted cash flow method.
But again, sometimes when you look at the South African market, the GSC is the biggest equity market, not just in South Africa but across the entire African continent. So why do you decide to list on the new Cape Town Stock Exchange?
The Cape Town Stock Exchange provides a number of advantages. The first one is cost. So to operate on the Cape Town Stock Exchange is very much less expensive than would be to run on the Johannesburg Stock Exchange. From a regulatory perspective, it was also, we chose the Cape Town Stock Exchange as exchanges are self-regulating entities, where the JSE over years has adopted more and more rules and regulations. From one perspective, some of those aren't applicable, to all shares, and the Cape Town Stock Exchange do not have all the onerous regulatory requirements as the JSE might have. As an example, the JSE requires that every company listed has got a chief executive officer and a chief financial officer. So for a fund that's externally managed, that is an extra cost layer of personnel that one has to have within a listed company on the JSE that you just don't have on the Cape Town Stock Exchange. The other thing that we had is we didn't have the requirement of, or we didn't think that retail investors aren't involved. So we didn't quite need the JSE's critical advantage of being open to the retail market.
But when we talk about the fibre optic business in South Africa, how does this fund play into that particular business industry in South Africa?
Sure. So there are a number of fibre network installers who are currently building their assets and then selling them onto one of a number of aggregators, as it were, your large integrated ISP fibre network owners such as Vumatel, Octatel, and these industry participants. So what our platform allows them to do is to actually realize value from their assets in a much more wider market. So effectively, we are making the funding market more efficient, so that they can get the best value for their assets that they construct. They can then recycle their capital into new projects to accelerate deployment within South Africa. And also, it then would also allow the constructors to not be beholden to one of a handful of fiber network acquirers. They effectively bring their network to our platform, the fund, and then we, as Gaia, act as a de facto ratings agency. We assess the network, its potential, and then we take that to a number of investors, and then they can bid on whether they wish to acquire that network or not. So it effectively allows for more efficient capital market in South Africa, and it allows for the fiber network market to recycle their capital into the new developments much faster, so that there's accelerated rollout of fiber in the country.
In terms of the investment and managed funds market in South Africa, how are you seeing impact of the virus pandemic so far in the year? What's your outlook at Gaia Funds Managers for 2022 with the new variants being discovered? What are you looking at your end?
Well, so one nice thing about infrastructure, in the areas that we are involved in, is that infrastructure is such a critical asset class that the pandemic hasn't impacted upon it to such an extent as one might imagine. I mean, in solar and wind farms, these assets kept on operating and producing electricity. we own a stake in the N3 toll road. Unfortunately, whilst there was travel was restricted, that was impacted, but it recovered quite quickly as industries had to build up their stockpiles again. And with regards to fibre, data connectivity and use remained, because our fibre networks is connected to the home rather than to businesses. We didn't see within our assets really an impact on a reduction in data use or a cancellation of fibre networks. So what it actually just proves with the pandemic is that infrastructure, it doesn't correlate to the rest of the market, and it provides a very good diversification benefit for investors for events such as this. And we don't foresee that any variant would be different to the original pandemic.
A very interesting conversation with you, Dr. Hendrik Snyman, the Chief Investment Officer at Gaia Fund Managers. Thank you so much for your time. And of course, we're going to touch base once again as we look at the markets and other products that you are bringing on board at your end here down there in Cape Town. Thank you very much for speaking with us on Front Africa Report. Thank you very much and have a great day.